Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Jim Stenevec along with Carol Masser. Let's take a look at some stocks that are on the move today. With us is Bloomberg News equities reporter Red Brown. He joins us in the Bloomberg Business Week studio. On your radar today, you had a lot to choose from.
Yeah, there was a lot of red to choose from. Stocks are up a little bit. But yeah, I think one place to start with and kind of topical to the big news from today is Enphase leading a lot of these solar companies and renewable energy companies down today after we got a look at the House version of the Big Beautiful Bill, which ended up gutting energy subsidies a little bit more than was expected. I think if we can think back just a couple of weeks, there was actually a lot of optimism around the same topic, that the version of the bill that went to the Ways and Means Committee, the draft bill, was actually a little bit kinder on these subsidies than was first expected, or feared, I guess would be a better way to put it. But now we're actually getting the version of the bill that passed the House much worse than feared. So, this is an industry that's very reliant on government help to get these big capital-intensive projects underway. So now there is a lot of kind of worries that we won't be seeing that money flowing in the future.
Number one decliner, in the S&P 500. Now you've got Enphase down about 44% year to date. So just really big hit. Another decliner, Williams-Sonoma? Yeah,
Williams-Sonoma trading down around 4 or 5% kind of all day today. And that's despite posting sales growth that actually blew past analyst expectations. Analysts were expecting sales to grow less than 1%, and the company actually posted a little over 3%. So a little bit surprising, I think, when we look at just the top level. The problem is the company did not pass that on to their full year guidance. So if we've seen this come up on a few of these retailer earnings results this quarter, that companies are doing well, but they're not passing it along, and the reason being is maybe some consumers are pulling forward their demand, right? So the fear is, if I'm worried about tariffs, I'm going to buy my sofa, buy my kitchen, my stand mixer now, right, before the prices go up.
Right.
But then I'm not going to be doing that in the fall or the summer or what have you. So the demand, the sales get a little lumpier.
Okay, speaking of sales and speaking of retail, shares of Target yesterday fell 5%. It's on your radar today.
Yeah, for that exact reason, because a bit surprising to see it bounce back just a little bit. We're seeing some kind of tepid buying activity for Target, despite that really another disappointing quarter for the company. It's been kind of a recurring theme for Target. The company cut its full year sales targets as it's really struggling to attract customers. It's losing a lot of ground to Walmart, kind of its closest competitor, although not an exact comparison, right?
Right. Not really the same, is it?
No, I mean, this was the point that Jen Bartoshis made recently, which is Walmart is a little insulated from some of the challenges that Target has, just because so much of what it sells is groceries,
right?
which are not considered discretionary. But Target has the issue where this is discretionary spend. And if consumers are pulling back on discretionary spend, then that's a challenge for the company.
Exactly. And worse than that, too, is like Walmart is making grounds in that discretionary area because they've been investing so much in the lower cost goods, right? So Target can't even necessarily compete in that area where historically they've been much more successful and competitive with Walmart. So now, because of the kind of the string of bad results, there's some questions around, is the right management team in place to get this company out of this rut, right? But today, stock is up, and I think that might be a little bit of acknowledgement from some investors that it's still a strong brand, right? Like, we all have memories with Walmart, shopping there, and valuations right now you'd have to go back to late 2011.
Walmart or Target? You mean Target?
Excuse me, Target, right?
Yeah.
So,
or Target, as we used to all have so much fun.
Right. See, that's the strong brand right there, is Target. But yeah, you'd have to go back to late 2011, early 2012 to find a time when the valuations for Target were this low consistently. So, I think maybe people recognizing a little bit of a buying opportunity for Target.
It's really fascinating too, because I always love kind of the analyst community. Did you see the story that analysts at B of A, Telsey Advisory, a bunch of them, apparently they have downgraded due to those disappointing earnings, downgraded Target. And so this story by Joel Leon saying Wall Street's enthusiasm for Target is at its lowest in 6 years. So it's interesting to see the bounce back. There's obviously investors who see opportunity.
Yeah.
Despite those calls.
Maybe sometimes those sell ratings are a buy signal for some people.
Listen, they're always so I know.
It's a weird balance, huh?
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.